Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, is here now to give us his outlook for 2022. Gareth, welcome to the show.
Hey, David. Great to be back. Thank you for having me.
Thank you. You are one of my last interviews for this year, so great to have you wrap up things for us for 2021. So before we talk about the next year, let's recap 2021. If you see the table on the screen now, you'll see that Bitcoin was the outperformer, up 73%. The S&P 500 was up 28%, gold down 7%, and silver down 19%. So of the asset classes that I mentioned, precious metals, stocks, and cryptocurrencies at large, cryptos did the best, with Bitcoin leading the charge and beating both stocks and gold. So what do you think is going to happen next year? Do you think Bitcoin can continue to be the outperformer, or do you think something else will take the reign?
Yeah, so based on what I'm seeing in the charts, and again, I'm a technical trader, I'm really more bearish on Bitcoin in the near term, so over the next 6 months or so, and then also bearish on the stock market based on the Fed tapering and potentially raising rates in 2022. Now, what I am bullish on is gold. Gold, I think, is going to be the biggest performer here in 2022, and you can see this beautiful wedge pattern right here on the charts on the GLD, or the gold commodity. And my guess is we're going to break out to the upside, and you should see a move up in the very least back to the highs from 2020, early 2020. And I think even a potential 3,000 price target on gold. And again, this is based on a lot of factors, but ultimately you have to look at the inflation numbers. I don't think inflation is going to go back to the 2% level. It's going to keep being a thorn in the side of the Fed. The Fed will taper, but ultimately people will rotate into gold. I do think it is the best performer in 2022.
All right. Well, I guess spoilers out of the way then. Hey, gold's gonna be the winner. No, it's okay. I asked you that question first, so that was that was on me. Gold's gonna be the outperformer. Let's talk about that. Don't you think that with interest rates potentially rising next year, and we'll talk about that, but suppose interest rates do rise, isn't that going to be a headwind on gold? Doesn't that mean real interest rates would also rise?
Yeah, so interest rates moving up will be a slight headwind, but the question is, why are interest rates moving up? Are they moving up because the economy is roaring and the Fed has to kind of tamper the economy or taper in that regard? Or are interest rates going up because of inflation? And again, from the input costs of labor again being the biggest input cost to a business, we know that the demand for labor is epic right now. They're having to offer bigger and bigger salaries. That eventually gets passed through to the consumer. And therefore, again, you'll see inflation being the cause of higher interest rates. In addition, let's not forget the Fed just cannot raise interest rates unlimited amounts here. Maybe 2%, maybe 2.25% is your max upside on the 10-year. And the reason for that is that the Fed at this point has to recognize the debt factor of the United States. We cannot pay, high amounts of interest on our debt or we'll go broke. And the Fed also cannot create a situation where the economy starts to spiral out of control. So I think you have upside in interest rates to 2.25%, and then that's it. And then you still have persistent inflation, which triggers that gold move to the upside.
So the dot plots indicate three rate hikes next year, totaling 75 basis points. Now, I've heard both sides of this argument. One, which is that they really cannot execute on what's expected. Even 25 basis point of hikes would be too much and unaffordable, like you said.
Yeah.
And the other side of the argument is that the Fed has more leeway. Well, the Treasury at large, the U.S. government does have more leeway than one may think. What's really going to be pressured is the corporate side and retail consumers. The government actually does have more leeway to raise rates. So what do you think? Where do you stand on this debate?
So I'm in the camp that the Fed does not have a lot of leeway here to do what they want, right? So you already see them tapering, where they're removing, I think it's $30 billion a month. They should be done with tapering by March of 2022. I think you'll get one interest rate hike next year, and that's it. And I wouldn't be surprised if by the end of the year, the economy is starting to kind of falter, and they might even have to think about additional stimulus measures. So, again, it's one of these things where, remember, when the Fed tapers, they're going to be removing a $1.5 trillion in dollars from the system just right there. If you raise interest rates, it's going to remove essentially this, additional amounts, and that is going to put in a major, depression 0.5. Now, I wouldn't use the word depression. That's a little too drastic, but I do think it's going to create a kind of a rut for the economy where unemployment will go up. And then you know what the Fed's going to have to do? Their dual mandate. They're going to have to come out with and figure out stimulative measures.
The economy will falter. Can you expand on that? Why would the economy falter?
Well, it's just, think about the kind of the drug high that the markets have been on because of all this infusion of capital from the Federal Reserve, right? We're coming off of people having more money. The government was sending out checks, interest rates at historic lows. The Fed was pumping in 120 billion a month. And now the Fed is saying, okay, we have to take some of that back, not because they want to, but because they're being forced to because of inflation surging to 8% now on a yearly basis. And so this is going to put the economy in a little bit of an issue going into the next, probably the next year or so, where it's going to have to fight these lack of stimulus measures in the system.
Okay, so let's talk about the Fed in a little more detail. They have indicated that rate hikes are conditional on two things: their inflation target being met, well, it's been more than met, and the second, their full employment mandate being met. Mm-hmm. Do you think that side of their dual mandate has been fulfilled?
Yeah, I think for me, when I look at when you see this many open jobs in the US, you have to be, as the Federal Reserve, say, okay, that low unemployment metric has been met. But my fear again comes in as they continue to taper, as the economy kind of says, okay, we have less money in the system, do valuations and stocks come down? I saw this ridiculous stat. It was an amazing stat recently talking about, compared to 10 years ago, how much of the US is now invested in stocks, which means that they've participated on this bull run in the market and they have a wealth effect. Well, my question is, what if the markets start to decline 10 or 20% and you have that wealth effect taken away, and then consumers are spending less, which then translates into unemployment all around? And then where does the Fed sit? So, the Fed's in a box here. They remove too much liquidity from the system. You're going to create a recession and higher unemployment, which means they have to come back and fight it with more stimulus. And it's a no-win situation, but they put themselves in this box.
Fight it with more stimulus. Mm-hmm. Okay, how are they going to do that? After they've raised rates, they're going to reverse on that and lower rates again? How's that going to happen?
They did it in 2018, right? That's really what happened. They to late 2018, they started to inch rates up. The market dropped 20%. And before you knew it, they were lowering interest rates again. So I think that's the situation. This is the conundrum the Fed has faced, is that they have that dual mandate, right? They have to pay attention to unemployment, which means you need the stock market to go up, but then also inflation, which again, you have to kind of tighten the reins to get that inflation under control. So which one do they ultimately go with? I've always been someone who says that human nature says they want to, help people. They don't want to hurt people. The politics of the situation means that the pressure from the government is going to be on them to keep rates low and keep the system kind of inflating. Mm-hmm. And so, yeah, I don't think it's a win-win either way. It's a lose-lose, but they'll probably err on the side of stimulus in the future. Okay,
interesting. Well, given that, let's assume that the Fed shares your outlook. Let's just suppose that they have that in the back of their heads. They have a Gareth Soloway somewhere in the Fed working for them. They're probably thinking the same thing, and they're probably thinking, okay, why bother raising rates at all then if we're going to have to stimulate the economy again?
Well, again, as long as they can do it. So first of all, they have to fight inflation right now, right? 8% inflation, that's hurting the middle income, lower income individuals in the US. So they have to come out. I think I even mentioned it last time we were on, that it was my guess that Biden reappointed Powell with the objective of getting inflation under control, as a large portion of his voters are likely that middle income, lower income population. So he has to show a good foot here. He has to get inflation under control before the midterms. But ultimately, which is going to win? All of a sudden, if you see unemployment run up to 8 or 10%, is it still going to be, we have to get inflation under control? Or is it, we have to help all these people without jobs get jobs? And I think it's going to be the stimulative side that will win out in the longer run.
Interesting. Okay, so let's assume that they do hike by 25 basis points. So that's one rate hike, as you have predicted. What's going to happen to the bond market?
Yeah, I mean the bond market again. I think the max upside on the 10-year personally is 2 to 2.25%. I would be shocked if it goes up much more, and if it does, you wonder what effect it's going to have on the overall system. So I'm in the camp that yes, I do think at some point we will break above that recent. Well, it's now not so recent, but 1.75% high on the 10-year. But I do not think the Fed will want it to get too high based on the U.S. debt and based on other factors that it will influence.
So let's move on to the S&P 500. Let's move on to stocks now. So up 28%, almost 30% on the year. What's going to happen next year?
All right, this is where it gets fun. So looking at the chart, you can see that the S&P continues to stay in this channel, right? It's really a remarkable channel on the S&P 500 or the SPY. My guess, my prediction is this upward channel will break to the downside, and you will see a retrace in 2022 to this target here, which was that former high pivot. It was an all-time high back prior to the COVID collapse. That is my prediction going into 2022. So you will see a move down, a pretty significant. I think that's about 15%, maybe even 20% move down in the S&P 500 over the course of 2022.
Okay, so the key here is over the course of 2022. We're not going to get a, I don't want to call it a flash crash because that wasn't what happened, but a sharp correction like we saw in March of 2020.
Yeah. Yeah, I'm not in that camp where it's going to be an all-out panic initially. I think what you have is you have a lot of people that are every dip are still buy the dippers. We're so conditioned to say, okay, the Fed is always going to have our backs. It'll be interesting to see as they continue to taper, what does the market ultimately think? So I think you'll have dips and then they'll be bought up. I just think they're going to start to make lower highs and lower lows. And then really once you break that channel, that upsloping trend line, that's where things get a little bit messier. You'll have a bigger drop, but you'll still see buy the dippers come in. There's a lot of optimism out there right now as we're seeing it over the last few days in the stock market ripping to the upside.
Well, surely not all stock sectors are going to perform equally, right?
No.
Some will outperform others. What do you like most? What do you like the least? For example, financials. I've read that financials are supposed to do well during an interest rate hike environment.
Yeah. So I think financials do relatively well. I also think you're going to see a lot of the stocks that kind of underperformed in 2020 kind of get a secondary bid. So for instance, one of the tactics that I love to do is called the January effect play, which is look at the beaten down quality names that are being sold for tax loss into the end of the year to offset gains by investors, and then look for those stocks to snap back. So for instance, Viacom is definitely one of my favorite stocks here. Let me bring up that chart. And you can see it's actually already popping a little bit, but look at this chart. I mean, just a ridiculous.
What happened there?
Yeah, this was that hedge fund blow up back in March where it collapsed down. And then look at basically it's been trading off of its lows, trading at a low PE of like 7 with a 3% dividend. And so these again are stocks that get sold into year end. I also think Discovery with its merger coming up for HBO Max is a very interesting trade. It's already starting to uptick a little bit here, but again, look at this trend line down here, beautiful trend line connecting the lows. And again, these are beaten down plays. They're seeing tax loss selling. Once that, I mean, if you think about it, right, if someone's going to sell Discovery or Viacom, what you're going to see is them do it before year end so that they can utilize that loss for their taxes, right? To offset a gain. Once January comes, you can't do that anymore. So it makes full sense that a large portion of that selling will be over and a lot of these stocks will get bounces. In addition, let me show you guys a couple other good plays.
Well, before you move on, I haven't followed that last stock.
Yep.
So what happened there? Was that another hedge fund blow up?
Yeah, this was so Discovery. I think this was Bill Huang, right? I mean, in the Tiger or whatever it was called. But yeah, same thing as so Discovery and Viacom were both being pumped up because of the hedge fund just kind of continuing to leverage themselves. This went along with a lot of those China names like TME, Tencent, and a few of those other ones as well had the same type of drops. But yeah, that's exactly what it was. But you could see that the downside has just continued because there's been a lot of tax loss selling by bigger funds and individuals into year end. And now, in my opinion, you're coming to the end of that. Another group of stocks, I love the marijuana stocks, Canopy Growth. I mean, look at this chart, just nasty chart to the downside, trading at multi-year lows, basically back to the 2020 lows. And what's so interesting about this is that I've hypothesized that as you get closer to the midterm elections, you're going to see both Democrats and Republicans talking about legalization. Number one, the government needs the revenue. Number two, it's a great talking point to try to lure voters into the midterms to vote for a specific side. So you're seeing even some Republicans starting to kind of say, hey, we need to legalize marijuana in the US on a federal basis. And that gives, any sort of chatter like that into the midterms, and these stocks could double easily in the new year.
Oh, okay. Well, that's a turn of events if marijuana gets legalized federally.
Yeah.
Well,
by the way, I don't think it will get legalized in 2022. But for these stocks to run, you don't need it to be legalized. You just need it to be talked about and become a more realistic thing for the next few years.
Yeah. Well, I hope the COVID waves falter by then.
Yeah.
If ever this does happen, can't be smoking when you're sick now.
That's true.
Let's talk about specific sectors that you don't like.
Don't like. So there are sectors I don't like. I'm looking at a lot of the bigger runners here. So I think with interest rates higher, it's going to make names like Apple and Microsoft, stocks that have had historic runs. I think those names are going to come in. We kind of saw that over the last couple of weeks come in, and then they bounced back here. But I do think that you're going to see kind of an unwind of ownership in some of those names. Now, those names may not be down drastically, but I do think they'll be underperformers compared to some of the bigger losers this year.
What about the tech companies?
Yeah, I mean, I'm kind of in that phase. I think again, if interest rates are going to grind higher, even just to 2% or 2.25%, then you have to look at generally technology. The QQQ will be an underperformer. And listen, it's been an outperformer for so many years. At some point, it does have to become an underperformer, and that leads me to believe that Dow stocks, value names, the Viacoms we talked about, and so forth, those will be the ones that actually perform better in 2022.
Before we move on to Bitcoin, I'm getting the sense that you think 2022 will be a year of rotation. From the outperformers will start to become the laggards, and the laggards will start to become the outperformers. I'm getting that sense from both the equity side, the sectors that you talked about, and of course, going back to gold. Gold was an underperformer this year, but you're saying it's going to have a comeback. So 2022 is really going to be an inflection point for you, isn't it?
It is. And it makes sense almost, right? Because if you're having an inflection point of the Federal Reserve, where finally you've gotten inflation. I mean, think about it. For the last 20 years, we've seen almost no inflation in the system, at least per the Fed, the way the Fed monitors it, right? But now all of a sudden we're seeing 8% inflation. I don't think that inflation ever gets back to 2%, at least not for another decade or so. And therefore, if you have inflation, if 5% or 6% that kind of continues for multiple years, it makes sense that the value names will perform better. It makes sense that tech will underperform, and that gold with inflation in the system kind of more persistently will outperform as well.
Okay, let's talk about Bitcoin now. We had a recent rally. It's at 50,000. We're more than $50,000 a coin.
Yeah.
Walk us through what happened in the last couple of weeks.
All right. So this is where it gets, I love talking about Bitcoin, obviously, and we've seen some really interesting stuff. So number one, we have to go back to Dubai. When I was with you in Dubai, we were talking about, would it break out? I was kind of against the breakout. It pierced the high a couple times, and then we saw it come right back in. And again, that's really important to understand. Here's your April high. And if you look at it, you got above it twice. There were two green candles right here, and you failed each time. That was kind of a signal that big money was selling into the manic, kind of crazy small money that was just buying. Now we've come in significantly. Now this is going to be the killer here for Bitcoin. So in the near term, 1 to 3 week outlook, I see Bitcoin going up here, and you could even see it starting to move up. In fact, I am long Bitcoin right now with a target of 54,000, right? So right around 54,000, that's where I look to sell. My bigger concern on Bitcoin is what we're seeing in the longer chart. So if you go back to the kind of the early portion of 2021, there was this classic head and shoulders. In fact, back then, David, it was one of my big calls that got me a lot of notoriety when I made it on Kitco with you. And then when it broke, we went right to the target of 30,000. Here was the break point right there. What concerns me is that we're starting to create that same head and shoulder pattern over here. And is this the beginning of a right shoulder? And if you see, Bitcoin kind of stall out 54, 56,000 and curl over and break this neckline, the calculated target is down to about $17,000 on Bitcoin. Now, whether or not that hits in 2022, I don't know. All I can go by is if it breaks, then starting to look for that downside. But I will go on record saying in 2022, we will revisit 30,000 with a decent potential of at least getting to 20,000 in 2022.
Well, Gareth, some of the top comments in our previous Bitcoin interviews have been, hey, man, when are you going to stop spreading FUD?
Yeah, valid. But again, for everyone out there watching, I'm a chartist, right? So pattern, price, and time factors, cycles, all that kind of stuff, the charts, that's what I'm going by. And again, in all fairness, the calls have been right. I still remember people, laughing at me when we broke the April high briefly and saying, oh, we're going straight to 100,000, right? Plan B was calling for it. All these people were calling for it. And I said, honestly, I don't see it. And ultimately it came in. So it's mainly the charts that I follow, and the charts give me a probability, right? So it's 80%, 70% chance that I'm going to be right. Still means I'm going to be wrong sometimes. But again, I'd rather have those probabilities in my favor. Understand, I'm actually long Bitcoin right now. But again, I'm not looking for new all-time highs. I'm looking for a bounce here to about 54,000 before I exit and look for another dip.
Can you go back to that Bitcoin chart where you drew the head and shoulders again?
Yeah, absolutely. Let's do that right now here. So, yeah, it's pretty wild stuff. Let me post those lines up again here.
Yeah, kind of looks like the last part is going like this. Who knows what's going to happen? That's
right,
and that's what your charts. That's what your lines are looking like. Who knows?
And that's what happens. The right shoulder is not fully formed yet, so it is just a potential pattern formation. But what you can't deny, and look at how freaky this is, right? So over here in the early portion of the year, you had the shoulder, and then you had kind of this M top right here, right? And then look at over here. It's identical. You have the same kind of weird M in the middle there. And again, you can't deny the kind of the comparison here, at least for now. So it's something that I have to keep on my radar as a technical trader and see if it does end up triggering.
Okay. One thing I will point out, and I think I've pointed this out to you before, is that in 2017, we had the double top and then it fell to new lows. We had a crypto winter for about 2 years or so. Mm-hmm. This time it didn't exactly do that because the second top was higher than the first top. Now in the previous two cycles, 2013 and 2017, the second top was lower than the first top. It does look like we're, obviously Bitcoin retraced to, I think what the low was $28,000 this year or something like that.
Yeah.
And it bounced back from there. It just looks like we're correcting and we're hitting new all-time highs. Like it's just, new highs are being breached every time a correction happens. So let me just offer a theory and let me know what you think. Mm-hmm. Maybe we'll retest the 30,000 at some point, a 30,000 mark at some point, but that's just going to bounce back up and breach a new high.
Yeah, so that's definitely a possibility. I mean, I think it's important, and I always like to say this when I'm on with you, is that if you ask me where Bitcoin is in 4 years from now or 5 years from now, I would say 250,000 or 500. So it's just this shorter term period where I see these deleveraging. And if I'm correct on the stock market, we know that the stock market does influence Bitcoin because of deleveraging, then that's part of my thesis for why it could dump out down to 20,000 or so. But yeah, you're right. I mean, the 30,000 level is going to be an epically big support level. And if it holds, then you're right. Then it could move up and it could very well do that. The only thing that kind of, there's some similarities to 2017. One is in 2017, when the Bitcoin market was hitting its high, the futures on Bitcoin were just launched. And that was the hype that drew it up to those all-time highs. Well, in October, what happened? The ETF was launched. So you have these kind of weird similarities with the tops. And then you also just have to think like, okay, let me take that into account. But I'll be the first to say that there's going to be an occasion where I'm wrong. Absolutely. And this could be one of them.
Okay. Well, let's keep tabs. Your track record has been pretty good so far, so no reason to suspect that maybe you'll be wrong in 2022. Now, Gareth, so Bitcoin overall this year to date, has done very well. We've had highs and lows, but overall, again, it's up 70%. Now, looking at the bigger picture, what do you think were the main drivers of this influx of capital into the cryptocurrency space last year and this year?
So Elon Musk, Jack Dorsey, MicroStrategies, I think those were huge. I mean, when you have influential people like that talking about it on social media, that's a huge driver. I also think the Fed has actually been one of the biggest drivers of interest in Bitcoin because of the money that they're printing and the inflation and the fear that, at some point the dollar will be worth less and less and less. You need a different asset. Now, again, the question is it gold or is it metals or is it Bitcoin? Obviously the younger generations are moving more towards digital currencies versus gold, but I'm a big believer you got to stay diversified. But I think, again, you have big players out there that are accumulating, that are big fans, and it's going to get notoriety. And I think, Twitter and other social media has been a huge driver of cryptocurrencies as well.
Okay. Circling back to gold, you earlier in the interview, you call for potentially $3,000. That's more than a 50% increase from today's levels, more than 50%, because we're not at $2,000 yet. Now that puts it in almost Bitcoin territory in terms of its performance. Let's assume that happens, okay? My question is, what could possibly beat gold next year?
Wow.
What could possibly go up more than 50%?
So just to be clear, for my 2022 outlook, I think Bitcoin will be lower than it is currently by the end of next year. The stock market will be lower. I think gold will be higher. There's a chance that silver has a history of outperforming gold on a percentage basis. I do think silver could be that. The only concern I have is if the economy starts to slow down, the industrial side of silver may drag it down a little bit, but still silver has a great track record of outperforming gold. Uranium, there's always a chance that uranium, I think you have to start looking at uranium as a potential energy source if we're really going to move towards eliminating the climate change risk right now. So those are different ones, but I would really go with assets that are offsetting for the dollar. So if the dollar continues to get printed or inflation is high, I think those are ones. Now, I'll bring up one more point. I will say that I think Shanghai Composite, and I talked about this earlier in the year. I do think the Shanghai Composite will break out in 2022 from the short-term highs. And I do think that you will see China put the regulatory stuff behind them. And so stocks like Alibaba with their current levels, Baidu, Tencent, I do think that those will be places to go to outperform the overall stock market.
Okay, Gareth, thank you so much for your outlook today. And thank you so much for all your help and for your collaboration with Kitco News in the last year. I look forward to working with you again in the new year. Thank you. Thank
you so much, David. Happy New Year. Happy holidays. And Kitco has been an amazing news service, and you do a great job. So thank you so much.
Well, it's because of guests like you that we've had our success. So thank you for watching Kitco News. Have a great holiday season. Happy New Year, and we'll see you again in 2022.